Assalamualaikum warahmatullahi wabarakatuh. Hello everyone and welcome to our presentation. So in this video, we'll be discussing about the debate between rule-based and principle-based accounting standard using a lease accounting as our main case. So in here, we will specifically compare the FAS 13 and also the IAS 17. So the title of the case is Arbitrary and Capricious Rules in Lease Accounting. So for our presentation will be explained by Muhammad Irfan Farras, Sri Andini, and Ryanda Allysia Putri.
I will explain about the background of the case. This case discussed criticism of IAS 17 leasing standards because they were considered too rule-based and didn't truly reflect the economic substance of lease transactions. The main issue was the classification between finance lease and operation lease. Many companies intentionally structure contracts so that lease would remain classified as operating lease, allowing lease asset and obligation to stay off from the statement of financial position. Economically, however, the company still had the right to use the asset and the obligation to make lease payment, which should have been recognized as asset and liabilities. The case also highlights that the use of numerical thresholds such as 75% of economic life and 90% of fair value created opportunities for manipulation and financial engineering. As a result, financial statements could appear stronger than the actual economic condition, for example by showing lower debt ratios. Overall, the case emphasizes the difference between rule-based and principle-based accounting standards and argues that lease accounting should focus more on economic substance rather than merely comply with technical rules.
So the first question from the study case is what are the criteria in International Accounting Standard Board and Financial Accounting Standard Board standard for classifying a lease as a finance lease? So under International Accounting Standard number 17, a lease is classified as a finance lease when it transfers substantially all the risks and reward of ownership from the lessor to the lessee. The criteria include the first one is the lease transfer ownership of the asset to the lessee. And the second one is the lease contains a bargain purchase option that is expected to be exercised. The third one is the lease term covered the major part of the asset economic life. And for the fourth one, the present value of the minimum lease payment amounts to substantially all of the fair value of the lease asset. And the fifth one is the lease asset is so specialized that only the lessee can use it. So actually, it's similarly to the FASB or Financial Accounting Standard Board, which is Financial Accounting Standard number 13. The criteria used to determine a capitalized lease are basically similar to those of International Accounting Standard Board. However, Financial Accounting Standard Board applies a specific numerical threshold known as bright lines. These include the first one is the lease term is equal to or greater than 75 of the asset economic life. And the second one is the present value of the minimum lease payment is equal or greater than 19% of the fair value of the lease asset.
Okay, for the next question is what is meant by bright lines in accounting standard and give example of the bright line in the US leasing standard. Okay, so in accounting, the term bright line refers to a specific quantitative threshold or objective that's used to determine how a transaction should be classified. Now, this objective are designed to eliminate ambiguity by providing a clear yes or no decision based on numerical criteria. So a good example of this can be seen in the US leasing standard under FAS 13. Now, this standard uses specific percentages to distinguish between an operating lease, which is a off-balance sheet, and a capital lease, which is recognized in the balance sheet. So one of the example is the 75% rule. Now, if the lease term is equal or greater than 75% of the asset's estimated economic life, the lease must classified as a capital lease. And the other example is the 90% rule. So if the present value of the minimum lease payment is equal to or exceed 90% of the fair value of the lease asset at the beginning of the lease must be capitalized. Then these rules create a clear boundary for classification, but they are often criticized for being arbitrary and allowing companies to structure transactions just below the threshold to avoid capitalization. So the next question is Mr. Kress does not believe the ISB approach of principle-based standard will be effective for leases. Provide details of the arguments he presented in favor of his case and consider the alternative view. So, from his arguments against principle-based approach by IS 17, he argues that there is a shift of decision making. So, by removing bright lines, the responsibility moved from the standard setters to preparers and auditors. So, this means that the managers are now making the classification decision, which can create a potential bias. The second one is he stated that arbitrariness still exists. Jadi, by eliminating bright line does not actually remove arbitrariness, but instead hide them within the professional judgment. The third one, he highlights the issue of increased subjectivity. Jadi, in terms such as major part and substantially all are not clearly defined, which can lead to inconsistent list classification across different companies. Fourth, he discussed opportuneness. He believed that transparency of the so-called arbitrary rules in FAS 13 is actually better for investors than the lack of clarity in the ISB's more subjective approach. Fifth, he raises concern about financial engineering. So managers may manipulate the assumption, such as making incremental borrowing rate when the implicit rate is difficult to determine. So in order to keep the leases off the balance sheet. And finally, he points out that the inconsistency with the conceptual framework. Jadi under IAS 17, leases meet the definition of both assets and liabilities. Therefore, logically, all leases should be recognized on the balance sheet. However, allowing operating leases contradicts this principle. Jadi, overall, Mr. Katz concludes that rule-based approach is more transparent, while principle-based approach creates hidden subjectivity and a greater opportunities for manipulation. For the alternative view, first, they emphasize the idea of substance over form. So they argue that the bright line rules in system like FAS 13 actually encourage what is known as the loophole mining. Jadi, for example, company may structure a lease to be 74.9% of an asset's economic life just to avoid capitalization. In contrast, cloud principle-based approaches such as IAS 17 requires accountants to focus on the economic reality of the transaction, not just the number. Second is that principle-based standards are more adaptable. They can better handle the complex and modern transaction that rigid rules may not have anticipated. This makes them more relevant in a constantly evolving business environment. And finally, principle-based standard encourages the use of professional judgment. Jadi instead of just following a simple checklist, auditors are expected to apply their expertise to ensure that financial statements presents a true and fair value of the company's financial position. Jadi overall, supporters believe that principle-based standard leads to a more meaningful and realistic financial reporting.
Okay, next I will answer the question number 4. The question is, do accounting practices under current IASB listing standards comply with the definition and recognition criteria of the IASB framework? So the answer is it doesn't fully comply with the definitions and recognition criteria in the IASB framework. This is because under the old listing standard, which is IAS 17, operating leases were often not recognized as assets and liabilities in the statement of financial position. Even though economically, the right to use the asset meets the definition of an asset, and the lease payment obligation meets the definition of a liability. In addition, the use of threshold rules such as 75% of economic life and 90% of fair value made the standard too rule-based and created opportunities for manipulation so that lease could still be classified as operating lease. As a result, the financial statement not always reflect the true economic substance of the transaction.
So maybe that's all from our video in explaining and answering the study case for accounting theory. So thank you for watching. Bye bye.